Right friends, welcome back to Banking Awareness Questions and Answers. This is the 14th module. I have already told you, as and when some questions are generated out of research at learning space, we are going to present modules maybe 1 or 2 in a month. These are not current affairs but almost static questions in banking awareness. We have initially recorded 12 modules and we are continuing as and when the questions are generated out of our research, as I have already told you. Right, look into the first question. RuPay Classic card holders will be entitled to a sum insured of rupees 1 lakh. Now, under Pradhan Mantri Jan Dhan Yojana, around 21 crore accounts were opened and almost all of them are being given this RuPay cards. RuPay cards are developed by National Payments Corporation of India. And these RuPay cards are Indian equivalent of Visa and MasterCards, and all the Pradhan Mantri Jan Dhan Yojana account holders are getting these cards, and under these cards special privilege is given that all these RuPay card holders will get rupees 1 lakh personal accident insurance, death and permanent total disability. That means if anyone dies due to accident or becomes permanently disabled, they will get rupees 1 lakh without paying any premium. In the banking system, granting loans to longer tenures may lead to asset liability mismatch. I have already told you in the first lecture itself. Assets means the loans in the banking system. If bank is giving a loan, that is asset for bank because they are generating some revenue. Liabilities means deposits. If we are depositing in the bank, bank is required to pay us interest. So that is the liability for the bank. And our deposits maximum time period is 10 years. All of you are well aware, fixed deposits time period maximum is 10 years. But at the same time, when the bank is giving loans for a duration of 20 years, what will happen? There will be asset liability mismatch. So the answer here is asset liability mismatch. In the banking system, granting loans to longer tenures may lead to asset liability mismatch. Look into the next one. Under Pradhan Mantri Mudra Yojana, the maximum loan which can be granted to micro and small enterprises is rupees 10 lakhs. All of you are well aware, Mudra Bank is acting as refinance agency. It is the subsidiary of SIDBI. So Mudra Bank is refinance agency, and when the bank like State Bank of India or Bank of Baroda is giving a loan to the customer, micro or small enterprise, then Mudra Bank will refinance to the bank. Mudra Bank will not directly lend to the customers. Banks will lend to the customer, and in turn Mudra Bank will refinance to the bank at lesser interest rates. So here Shishu means loans up to rupees 50,000. Kishore means more than rupees 50,000 and up to rupees 5 lakh. Tarun means more than 5 lakh and up to rupees 10 lakh. So under Pradhan Mantri Mudra Yojana, maximum loans can be given up to rupees 10 lakh for micro and small enterprises. Look into the next one. Under credit linked subsidy scheme, interest subsidy of 6.5% will be given for house loans up to rupees 6 lakhs for a maximum tenure of 15 years. What is this credit linked subsidy scheme? Here I would like to tell you, Government of India wants to implement housing for all by 2022, and as per the Government of India calculations, 2 crore houses are required in urban areas, and Government of India wants to facilitate construction of these 2 crore houses by 2022. This is totally central sponsored scheme. This credit linked subsidy scheme is totally centrally sponsored scheme, and to facilitate housing in urban areas, central government came up with the program that for economically weaker sections and low income group categories. You may ask, what is economically weaker sections? Economically weaker sections are the families having income up to rupees 3 lakhs per annum. Economically weaker sections are the families having income up to rupees 3 lakhs per annum, and low income group category are having income more than 3 lakhs, that is 3 lakhs 1 rupee up to rupees 6 lakhs per annum. So, for these two categories, if they want to construct house in urban areas, if they want to purchase house in urban areas, then central government will give 6.5% interest subsidy. Central government will give 6.5% interest subsidy up to a loan of 6 lakhs over a period of 15 years. This is known as credit linked subsidy scheme, right? So, this will be applicable in urban areas covering 4041 statutory towns. They will be covered in phases up to 2022. So, if someone asks credit linked subsidy scheme, that is for the construction of houses in urban areas, and 6.5% interest subsidy will be given by central government for construction of houses in urban areas. IFC, this is the arm of World Bank, or you can say this is one of the organs of World Bank group, and International Finance Corporation issued rupees 1000 crore rupee denominated bonds for the first time during 2014. For the first time these bonds were issued, and these are known as masala bonds. Nowadays it became a practice to issue rupee denominated bonds abroad. These are known as masala bonds. When rupee denominated bonds are issued abroad, it indicates two things. One is the currency risks lies with the investor. If rupee depreciates, that risk is to be borne by the investor or the lender, you can say. And the second important point is issue of rupee denominated bonds abroad shows the confidence of Indian currency. This shows the confidence expressed by investors on Indian currency. These two things please don't forget. As per the RBI guidelines, universal banks can invest up to 30% in payment banks. You may ask, what is universal bank? We have already discussed in various lecture classes. All these banks, Bank of Baroda, ICICI Bank, State Bank of India, Punjab National Bank, these are all examples of universal banks. They can do anything, and universal banks can invest up to 30% in payment banks. And recently ICICI Bank invested 30% in Finopaytech, and these payment banks, 11 in numbers, are going to be established shortly, and these are examples of differentiated banks. Which of the following is known as alternate investment fund? Alternate investment funds, angel capital, that is early stage funding for budding companies or startups. If someone is establishing some company, early stage funding is required, few thousands of dollars. That funding is given by friends or well-wishers or relatives, that is angel capital. Then venture capital, if someone sees there is potential for this company to grow, they will come forward and invest, that is venture capital, that is some bigger amount. Third one is private equity. For private limited companies, acquiring part of the stake is private equity. Investing in private limited companies is the private equity. So, these three are examples of alternate investment funds, and Narayana Murthy committee was appointed, and recently they gave some recommendations with regard to alternate investment funds, because the mechanism of alternate investment funds has not taken proper roots in our country, and still almost 90% of venture capital comes from foreign countries. Public debt is presently administered by Reserve Bank of India. Reserve Bank of India manages public debt. Public debt means Government of India borrowing from public. What will happen is Government of India's securities, or you can say Government of India's bonds, are released by Reserve Bank of India, and normally banks and financial institutions will purchase those bonds, and this is the mechanism. We deposit in banks, banks will invest in government securities, RBI will transfer that money to Government of India. This is the public debt. That means Government of India borrowing from public like you and me. and this public debt is managed by Reserve Bank of India. Out of the 6 banks nationalized in 1980, all of you are well aware, 1969, 14 banks were nationalized, and in 1980, 6 banks were nationalized, and Prime Minister was Indira Gandhi at that time, please don't forget. And out of the 6 banks, a new Bank of India was merged with Punjab National Bank in 1993. Which of the following is depository participant? When you are opening bank account, your bank account is maintained by SBI or ICICI or HDFC, whatever it is. But when you are opening Demat account is the account which facilitate investment in shares. When you are opening Demat account, that account is originally maintained by depository. In India, 2 depositories are there: National Securities Depository Limited, Central Depository Services Limited. If you are opening Demat account, that account is maintained by either NSDL or CDSL, and bank will act only as intermediary. Your Demat account is actually maintained by NSDL or CDSL, and bank will act as only intermediary. So, depository participants are banks. So, depositories are NSDL or CDSL who actually manages your Demat accounts, and depository participants are banks which act as a medium, and you are the investor. So, depository participants, please don't forget. In 1985, the United Commercial Bank changed its name to UCO Bank. This United Commercial Bank was established in somewhere 1940s by Ghanshyam Das Birla, and subsequently in the year 1985, this bank's name got changed to UCO Bank. Because of reason, this United Commercial Bank at the time was also in existence in Bangladesh. So as to bring clarity for international transactions, this United Commercial Bank changed its name to UCO Bank in the year 1985. Look into the next one. Non-banking financial companies with asset size of rupees 500 crore or more are classified as systemically important NBFCs. All of you are well aware about systemically important banks. ICICI and SBI are designated as systemically important banks. Similarly, systemically important NBFCs are also designated as per the RBI instructions. NBFCs with asset size of 500 crore or more are classified as systemically important non-banking financial companies. That means they are too big to fail. Failure of those NBFCs will have adverse implications over the general public as a whole. Core banking solutions to cooperative banks is piloted by NABARD. Almost all the universal banks are on the core banking solutions network. What is the meaning of core banking solution? Previously, when you were customer of some Andhra bank, your account is maintained with that particular branch only. Now, you are no more exclusively the customer of that branch. At present, because of core banking solutions, if you are opening account with ICICI Bank Delhi branch, your account can be accessed anywhere across the world. Because of core banking solutions, your account can be accessed anywhere. That is the beauty of core banking solutions. So, this is a solution for enhancing customer convenience through anywhere and anytime banking. And in the core banking solutions, core means centralized online real-time environment. In core banking solutions, core means centralized online real-time environment. Now, almost all the universal banks are into core banking solutions network, but cooperative banks are now being brought under core banking solutions network, and NABARD is piloting this initiative. In masala bonds, the currency risk lies with the investor. Masala bonds are rupee denominated bonds issued abroad, and here if rupee depreciates, the risk lies with the investor, right? So, if rupee depreciates, he will be the sufferer and the borrower has got no risk at all. He is borrowing 1000 crores of rupees and he will pay 1000 crores of rupees with interest. So, in masala bonds, the rupee appreciation depreciation will be borne by the investor. If rupee depreciates, he will be the loser. Borrower will not be affected. But if external borrowing is there in dollars, then if rupee depreciates, then the borrower will be affected. Which of the following is for working capital finance? Overdraft, cash credit, bill discounting. These mechanisms are basically for working capital finance. When you are establishing some company, two types of finance is required. One is the initial finance for capital expenditure, for establishing machinery, for establishing office establishment, that is capital expenditure, and subsequently for running the affairs of the company, the expenditure is known as working capital finance. Month-wise salaries, month-wise operational expenditure, this is all part of working capital finance, and banks will allow overdraft facility or cash credit facility or bill discounting. So, these are the mechanisms which facilitate arrangement of working capital finance by the banks. So, all the above is the right answer here. If one borrows money for 15 days to 1 year duration, it is called term money. And please don't forget, if anyone borrows money for 1 day, it is called money. 2 days to 14 days, it is notice money, and for 15 days to less than 1 year, it is term money, and these three put together are money market instruments. So, in general, the time period of money market instruments is up to 1 year. Which of the following is not allowed to participate in call or notice money market? Just now we have discussed call money is 1 day, notice money is 2 to 14 days, and scheduled commercial banks, primary dealers. You may ask, what is primary dealer? Primary dealers are basically established to trade in government securities and money market instruments, for purchasing government securities and selling them, and at the same time to participate in money market instruments. These primary dealers are established, and primary dealers basically deal with government securities and money market instruments. And cooperative banks, they are also allowed to participate in call money market. So, scheduled commercial banks, primary dealers, cooperative banks, they are all allowed to participate in call money market, but regional rural banks are not allowed to participate in call money market, because they have their parent bank to take care of their needs. Each rural bank will have sponsor bank, it will take care of their needs. That's why regional rural banks are not allowed to participate in call money operations. Which of the following trades in government securities? Just now I have told you, primary dealers deal with government securities, and SBI DFHI Limited, PNB Guilds Limited, these are examples of primary dealers. And primary dealers basically purchase government securities and they sell in secondary market. That means they have to create liquidity for government securities. The main purpose of these primary dealers is to create a market for government securities in secondary market. And please don't forget, primary dealers are regulated by Reserve Bank of India, because they are basically government securities as well as trading in money market instruments. That means primary dealers deals with government securities, which is regulated by Reserve Bank of India. Not only that, primary dealers deal with money market instruments, and RBI is the regulator for money market instruments. Which of the following is allowed to issue certificate of deposits? Here, scheduled commercial banks and all India financial institutions can issue certificate of deposits. If State Bank of India requires 1000 crores for 3 months, they can issue certificate of deposit and borrow money from market. So, that is certificate of deposit. So, certificate of deposits can be issued only by scheduled commercial banks except regional rural banks and all India financial institutions, but local area banks, regional rural banks, cooperative banks are not allowed to participate in certificate of deposits. And if you want more about these money market instruments, we have already deliberated in lecture class. Please listen to the lecture part. Who acts as the registry and central depository for the government securities? Government securities depository is a public debt office of Reserve Bank of India. So, Reserve Bank of India maintains the registry and central depository for government securities, specifically that is public debt office situated in Reserve Bank of India. Identify the incorrect one. All of you are well aware about Hindu undivided family. Hindu undivided family has got separate existence. They can open separate bank account. They can get PAN card also in the name of Hindu undivided family. And here in Hindu undivided family, Hindus, Sikhs, Buddhists and Jains are eligible to form Hindu undivided family. That is the first point. And here the senior most male member is designated as the Karta, and he is the authorized signatory of Hindu undivided family, and Hindu undivided family can maintain bank account, and it is a distinct entity, it is separate entity like an individual and can have separate PAN card also. So, all the three given sentences are correct, none of these is the right answer. Which of the following is authorized by the central government to manufacture India gold coin with Ashok Chakra? This India gold coin, MMTC, Metals and Minerals Trading Corporation of India, that will mint India gold coin. One side Mahatma Gandhi, other side Ashok Chakra, and the gold to be used is surrendered under gold monetization scheme. Indians are holding gold anywhere between 20,000 tons to 40,000 tons. To bring out that gold monetization scheme was designed, and whatever the gold coming out of gold monetization scheme can be utilized for minting of India gold coins, and India gold coins will be minted by this MMTC, Metals and Minerals Trading Corporation of India, and will be sold through bank branches. SEBI directed depositories to deposit 5% of their profits every year to Investor Protection Fund. SEBI is the regulator for these depositories. We have already discussed. Depositories maintain demat accounts, and recently SEBI gave instruction that these depositors should deposit 5% of their profits every year to Investor Protection Fund. This Investor Protection Fund is used for investors' awareness by SEBI, and SEBI maintains this Investor Protection Fund, and the depositories NSDL and CDSL are required to deposit 5% of their profits every year to Investor Protection Fund. And let me clarify once again, our demat accounts will be maintained with NSDL or CDSL, and bank will act only as intermediary, and bank is known as depository participant. Look at the last one. Government of India is planning to align with international financial reporting standards. The basic purpose of this international financial reporting standards is, if the countries follow similar type of accounting standards, then comparison will be very easy. Nowadays, cooperation of one country with another is the need of the hour, and several multinational companies are establishing their bases in several countries. Under these circumstances, following international standards or one type of accounting standards is a must, and all the scheduled commercial banks, insurance firms and some NBFCs will move to Indian accounting standards with effect from 1st April 2018. So, India will align with international financial reporting standards from 1st April 2018. All the commercial banks except RRBs are required to follow Indian accounting standards or Ind AS, which are in alignment with international financial reporting standards from 1st April 2018. Friends, let us conclude here, and please do join for other modules. Have a nice day. Thank you.